Good morning, folks, and welcome to this morning's video. So this morning I have a jam-packed 4 pairs on watch, and those pairs are Aussie dollar, Kiwi CAD, Euro Kiwi, and Kiwi yen. So a lot of Kiwi presence this morning, and I've just flipped my bias on Euro Kiwi, and I shall explain why when we get down to that pair. I'll tell you what I'll be looking for, contrary to what I was looking for yesterday. But without further ado, my favorite of the bunch is Aussie dollar. So on the higher time frames, you can see that we have, we have this very impulsive move down. Okay, we broke above all of these highs, okay, and then completely smashed to the downside, catching people the wrong side of the market. And if we just zoom in on the 4-hour, I'm just looking for reasons why we specifically reacted from there. Well, we have this consolidation here, the start of all of that consolidation, which is typically where price responds to the base or the top of a piece of structure, if you like. The base or the top of this piece of structure was here, okay? And if you look here, we have this kind of structure. We have a reversal structure at the top of, or the base of this piece of structure. Okay, we have the 1, 2, 3. We kind of wick to it. Okay, so that gives me a clue that this is the area. This was an area of value. Okay, we then break above, catch people the wrong side of the market, and then we start to see those impulse correction continuations to the downside. Okay, we are now, we just zoom back out, so we're trading back below all of these highs. And also, just to reiterate what I've just said, we have this structure here, this kind of structure here. Now, if we were going to move to the upside, the base of that structure would likely be where we would do it. Okay, and what have we done? Price didn't tap it and then start moving to the upside. I don't know why it would after an impulsive move down like that. That wouldn't really typically be what we would see. Instead, price has consolidated under the low of this structure, suggesting it didn't find enough liquidity here to send it to the upside, and that this is just an impulse correction continuation to push lower. Okay, and if we measured this, of course, this could form a bigger structure, a bigger version of itself. If we measured that, that would actually take us down to there, which mathematically lines up down there. I'm not sure we're going all the way down there at this moment in time, but we could certainly capitalize on a move to the downside. And if you look, there's nothing. If this is an impulse correction continuation to push lower, there's nothing of any significance on the left until all the way down to here, where we have a sharp move, which likely means there's a lot of liquidity there. So potentially we could capitalize on a move down to here, and then I would anticipate, even if we did keep going to the downside, I would anticipate quite a lot of profit taking, which I would not be interested in sitting through. Okay, so we look, if we zoom in, I like the fact that we're trading mostly below here, because the more we trade below here, the more it suggests that liquidity wasn't found there to send price to the upside, versus if we were sat on top of this low, which would be a different story. I like the fact that with the exception of how we started, the sequence has been pretty reliable. So we're well positioned on the higher and the lower time frames. Okay, and we just zoom in, you can see prices starting to form more of this kind of flat structure here. Okay, and if we zoom right into the 15-minute chart, you can see why price might be pulling back, because on the 15-minute chart we have this sharp move here, which price has near missed to a couple of times. Okay, when we've near missed to it, it likely means that people will try and sell this, but there's still liquidity up here that needs to be tapped into for that move to the downside to be able to occur. Okay, so what I'm looking for, with all of that in mind, and with the near miss in mind, and with this, what price is doing now, the structure that's forming, if that is the top of the structure, that would be flat as well. I like that as well. What I'm going to be looking for from this pair is I'm looking for a tap into the area of value as I've got it marked, and then I'm looking for an impulse back down on the 1-hour chart, followed by a 3-touch 15-minute continuation, or a 2-touch 15-minute continuation with the 3-touch structural approach. Okay, I'm not looking for the 5-minute entries in this area because of how far we are in. Okay, let's try that again. I'm not looking for 5-minute entries at the moment, just because of how far down in the move we potentially are relative to where this move started. Okay, so I'm looking for slightly more deliberacy, especially as we have a little area of consolidation sat just above. Okay, which just happens to be the retest of the back end of that. So technically speaking, we could gravitate a little bit higher, which if we just measure this. Okay. Okay, so all of the alerts are just going to go off now. So, and I've noticed that they cut my vocals out when I'm trying to make these videos. So if you hear me pause, it's so that my voice doesn't get cut out while all these crazy alerts are going off. But we have the impulse correction potential continuation to the upside. And if we actually measured that, so if we assume that impulse, the continuation leg out of an impulse correction continuation is of a similar length, theoretically that could take us up to there. So that is also another reason why I'm waiting for slightly more deliberacy. But if we get this entry, okay, we move down, we get that, then I would be looking to target this low. That would be the first inflection point. We would have about 4.5% to work with to the low. And then what I would do is I would set a take profit at that higher time frame low that I just showed you for something in the region of 9%. And then I would trail my stop loss at the same time. So that is Aussie dollar. We shall see whether this gets to the area of value. I have an alert set there. If it's not triggered, then I'm not going to be looking to place a trade on this pair. So that is Aussie dollar. Kiwi CAD. If we just zoom out on Kiwi CAD, you can see we have the sharp move there. We sell off. Price comes all the way back up. We near miss to it again, which is largely why these corrective moves back down happen. People are selling this whilst the orders that are still up there and being placed in that area are dragging price up. Sure enough, we get the impulse correction continuation. We break above, catch people the wrong side of the market. We don't commit here. Okay, it's just non-stop alerts now. The craziness of the market is continuing. So we don't commit here. Why don't we commit? Likely because there was liquidity here, because we have that very, very sharp move there. So price comes back up, likely takes out some of the liquidity that was sat there. Then we move to the downside aggressively, and it looks logical to me that price is gravitating back towards most likely this low. Okay, but certainly this low as a first target where I'd anticipate maybe some profit taking there. Okay, so if I was a seller, I wouldn't be getting out my position until there. So it makes sense why price would find its way back down to there. Okay. So if we just zoom in, you can see that we have this near miss here. Well, you can't see that necessarily that it's a near miss, but if we just zoom in a touch, okay, we have this high here. Okay, let's try that again. That's 4 alerts in about 1 minute. So the madness of the market continuing. So we have this high here, and we have a near miss to it. Okay, we have this, and we have this expanding pattern. Okay, so it's likely that price will gravitate back towards here. And we just this also happens to be the retest of the back end of all of this. Okay, we have a 1, 2, 3 last leg, suggesting that may, if we have a 1, 2, 3 last leg and it completes at an area of value, that also suggests a move to the downside may be imminent. Okay, so what I'm going to be doing in this instance is the same thing once again. So I'm looking for the tap into the area of value. We've had that now. So what I'm looking for, I'm going to reset the alert because lots of madness is happening on the fly and the alerts are not working for some reason. Right. So I'm looking for a break back below. Now my computer is frozen up and my mouse has just failed as well. So I have no idea what's going on this morning. And another alert has just gone off. This is madness. My mouse literally just turned itself off. Okay, it's doing it again. So now we're going to have to plug the mouse in. Bear with me. Right. Right, there we go. The mouse needed to be plugged in. I got no warning at all that the mouse was low on battery. So anyway, let's hope we have no more distractions. So what I'm looking for is a break back below the area of interest. We've had the tap into the area of value now. Now we've got seagulls. This is ridiculous. Anyway, I'm looking for a break back below the area of interest, followed by a 3-touch 15-minute continuation or a 2-touch 15-minute continuation with the 3-touch structural approach for the same reasons, just because we're quite far into this move potentially. Okay, just looking for slightly more deliberacy. And then I would look to target that low as a first target for something in the region of 3.6. And then we would have about 5.8 to the low. This is insane, absolutely insane. So I'll be targeting that higher time frame low for something in the region of 5.7. It's another alert just gone off. That's about 6 in 2 minutes. And then I would target that low for something in the region of 5%, just a potentially a shorter term move where I would anticipate some profit taking. So hopefully we're not going to get any more alerts go off for the end of this video, because it's very difficult to make them if madness just keeps happening all the time, but is what it is. So that is Kiwi CAD, and if I get through all of these in 20 minutes, it would be a miracle. So I've flipped my bias on Euro Kiwi, okay, simply because if you remember yesterday, I was looking for price to tap the high, and it didn't tap the high, which gives me a reason to believe that, you know, we would likely gravitate back towards that high, and I shall explain why. So we tapped into, well, we actually near missed that area, but we can see we've had a lot of impulsive momentum. We're trading back above all of these highs now and back above there, and we've consolidated, right? And because we near missed that high, that's now given me a clue that this is potentially an impulse correction continuation to push higher. Okay, especially as we have a little area of consolidation, not of much significance, but one of the things that made me think that we would gravitate back towards there is because we had a lot of volume built up within this structure, okay? And typically with this much volume, we do typically break out higher to the upside. Okay, so one of the reasons we may have near missed this area is because we're building volume here to actually build higher, to actually move higher. So that's why I've flipped my bias, and now the internet has gone down. This is probably the most insane video I've ever made. Right, there we go. We're back in the room. So what I'm looking for here is the following, okay? So we've had the near miss to that area of value. You can see that we have the sharp move there. We have the sharp move down followed by the sharp move up, and we near missed to it, okay? So how I'm seeing this at the moment, especially as we have a bit of this kind of scoop here, and especially as we have this sharp move here, which is set just below, I'm seeing this as potentially a break below, a break back in above here, and then potentially we capitalize on a move to the upside there. We don't necessarily have to retest the back end of this, but that would certainly be a bonus. But as a minimum, if we tapped into that and then broke above here, then what I would be looking for is the same thing again, but in reverse. So I'm now going to set the alert on the fly because we've had crazy alerts going off everywhere. So I'm going to reset that. So now I'm looking for the break back above the area of interest and looking for the same thing as I was looking for on the other pairs, just in reverse. And then I would have about 3% to that high. Okay, 4.5 to there. And then again, this would be another, in this instance, I would actually, because my minimum criteria for the mechanical management is 5%, I would set a take profit there and trail my stop loss accordingly. Okay, a take profit actually at the high, not at the 90% area, and that's what I'm going to be looking for on Euro Kiwi. Okay, so of course, if we'd have tapped the high, if we'd already broke above the high as I was looking for yesterday, then I wouldn't be looking for longs today. It's literally one of the reasons is because we missed that high, so it's likely that price will gravitate back towards that area, even if it was to continue to the downside. Okay, it would likely gravitate back towards where the liquidity is sat. Okay, which would be most of the liquidity, which is up there. Okay, so now Kiwi yen. So the other alert must have been on Kiwi yen. So I'm just going to reset that on the fly. Okay, what's happened now? Right, there we go. So one thing I've learned about trading is it makes you very good at pivoting. Okay, you get all this crazy stuff happening all at once, and you have to learn to navigate through it, which is helpful to you in life. All the craziness you're seeing in the market is the same craziness that's happening in my life at the moment, and I'm able to navigate through that as well with almost flawlessly, believe it or not. I don't know how that's happened, but that's what happens as you improve as a human being and as a trader. But anyway, we have that high there. Okay, we broke above, we near missed that high, suggesting that this was an attractive area of value, as did the fact that we had a sharp move there. Okay, we tap into the area, break above, and then you can see we've moved to the downside. Okay, and we've got that same aggressive momentum. We have 3 bearish weekly candles. It's not surprising to me that we consolidate afterwards, because that's typically what happens after 3 candles like that. This is slightly lower on the list because, if you haven't guessed already, we're actually trading above a high. Okay, so even if this is going to continue lower, this is where you can get deeper pullbacks, which is literally just profit taking because we're sat at a low. Okay, but you notice that this low is near missed to here. So partly why this is lower down on the list is because we're literally just trading above a low. That's literally it, pretty much it. Okay, you can see we have that move up there, but if you analyze how we've moved up in a non-progressive way on the lower time frames. Okay, and one of the reasons we may pull back more deeply is because this is a slightly steeper move than if you just look at the other ones. They're more flatter. You have the 2 tops there. This is an expanding pattern. That's fine. That's a little bit flatter, but with Kiwi yen, bearing in mind we're on the 1 hour chart, this is a slightly steeper structure. Not steep, but steeper, which makes me think that we may push a little bit higher. But what I'm going to be looking for on this pair, I was trying to delete stuff there, but it's not letting me do it for some reason. Okay, so what I'm looking for in this pair, if we just zoom in, so we have that structure, we break below, price leaves a footprint, which happens to be the retest at the back end of that. Price comes up to it, it near misses, we get the corrective sell-off, likely because people are trying to sell this, whilst the orders that were still up here are dragging price back up, and sure enough, just as I was anticipating last night, we get that aggressive move up to the area of value that I was anticipating price would gravitate back towards. Okay, so what I'm looking for today is the same thing again, okay, which is we've had pretty much had the tap into that area now. So now I'm looking for the pushback down below the area of interest, and then a 15-minute consolidation, and then I'll be able to manage it down to that low for something in the region of 3%. And then in this instance, we would have, we'd have about 4, not quite 5% there, depending on the size of the stop. So I would likely be targeting this low, depending on the size of the stop loss, something in the region of 7%. And once again, I would measure from the range. I would set a take profit there, and I would trail my stop loss accordingly. And that's what I'm going to be looking for today, folks. I can't believe I got through this video with all of the chaos going on, but there we go. So that's what I'm going to be looking for today, folks. I hope you've enjoyed this video, and I hope you enjoyed the lesson as to why I flipped my bias on Euro Kiwi. Hope that made sense, and I'll see you again in the next video. Enjoy the rest of your day.